Everybody, Tom Gentile, welcome to week 3 of our Optionetics Trading Essentials webinar series. Glad to have you guys all here on time. And I think I started 1 minute after 8, so I apologize for being late 1 minute. We have a great session for you today. I am going to review the last few weeks, and I want to show you something. Last week we talked a little bit about the money clock. So I put together a little spreadsheet of the money clock trades, and I did a lot of work on these. I want to show you actually how they performed. I had this sheet with me going into this morning. I want to show you how these performed today, and I'll talk about again where you can get all this information. But tonight we are going to focus on calendar spreads. So that is the plan for today. Session's being recorded. I'll get the recording out to you ASAP. All right. Slides. If we have, in fact, tonight we're going to be talking about calendar spreads for the majority of this webinar. I'll make sure that you guys get the slides on that as well. And of course, the disclaimer you see on the screen in front of you. You have this on here. You can pause this on the recording and read it word for word if you like. I would suggest right before bedtime. And if you just pay attention to the first two pieces I want to say, which I talk about in every webinar, stock and options trading has large potential rewards, but also large potential risk. The other part that I want to mention is that myself, Jay Harris, Jeffrey Beamer, who's our guest tonight, and anyone else associated with Optionetics or Tom's Trading Room, we are here as your educators. All right, we teach you how it is that we trade. We are not investment advisors. We do not give specific personalized investment advice. And everything we're going to be talking about tonight is in US dollars unless noted otherwise. So let's go ahead and get started. Again, the last 3 weeks we've been talking about stock selection, calls, puts, spreads, the darknet strategy, the money calendar strategy. Tonight I'm going to do a quick review of all that, and we're going to then move forward into trading calendar spreads like a master, again with Jeffrey Beamer. So at the beginning of week 1, we talked about stock selection. We talked about the cboe.org as the place you can get the most popular stocks that I trade. From there, we were discussing week 1 and 2 case studies, and in week 1 it was all about darknet. And we talked about darknet, and I showed you a couple of darknet signals. One of them was in Amazon. So let's take a look. And at the time, Amazon was trading, down there between the 1700 and 1725 area. And then, of course, let's go ahead and take a look at what has happened with Amazon today. And as you can see here, here's what's happened since the 8th. All right, the 8th was our week 1 when we discussed Amazon. You can see this is rolled up, and this was 1014, 1015. So you can see it's actually had quite a nice little run here. In fact, actually, we started talking on it before the 8th. This was week 2. We talked about it again with the money calendar. Nice little run here. From last week, it's up about 60 points. From the week prior, it's up about 35. And so moving in the right direction. Another case study we were discussing with darknet was a company called Copart, symbol CPRT. And as you can see here, we talked about the last darknet that signal it had came in around the low 70s, and then it came out at the highs for the year at the low 80s. Since then, it's pulled back. Now, it suggested a darknet buy right around 79.5. It dropped the next day to around 77, and then that day after that bounced right up and started moving forward. Right, here's where we are as of now. There's that darknet signal again. I just spread the chart out a little bit. You can see 79.5. Where are we now? 81.74, heading in the right direction. Okay. Last week we discussed spreads, and we also discussed the money calendar. And I talked about the money calendar in a monthly view. All right. I also talked about how if I were to click on any of these days, that I would open up the daily view. And the daily view shows us, as an example, a look into that day and the stocks that are that have seasonality, seasonal tendencies. All right, we have the stock symbols on the left. Green means it has a tendency to go higher during this time frame. Red has a tendency to go lower. This is back test a minimum of 10 years. And you can see with this example, here's a 30-day trade with Amazon, 90% accurate historical accuracy. Here's a 30-day trade with Google, 100% accuracy. Netflix 100%, NetEase 90%, Celgene 100%. This was all back in June, but I also showed you some case studies that we were looking at that were last week. We're going to go into both of those case studies. So once I get a money counter signal, I ask myself two things as an option trader. Where's it going and how long is it going to take? And money counter allows us to have the answer for both. All right, where is it going between now and the ending part of that pattern? That's our how long. All right, where is it going is the average move that happens during that time frame. And so putting those together, it gives the option trader a really good, clear idea of what type of options or what type of strategy they need to be doing. All right, now last week we also talked about Toyota Motor. All right, we did a review on Darknet. We talked about Toyota Motor last week, and I just want to show you where it has gone in the last week, the buy signal that we saw last week, and here we are today. We're talking about something that went from 131 to 137. All right, and if you remember, I actually clipped this right out of last week's video. In fact, you can see if you come down here, the bottom left-hand corner, it says 17:58 out of an hour and 4 minutes. You go 17 minutes and 58 seconds into this webinar, you see this slide, you'll hear my lovely voice, and you'll see that the trade we were looking at was the November 15th 125 calls. They were trading 785, and we talked about the fact that we could do better than that with a spread, but regardless, this is the trade that I showed you, and here is where it's gone. Cost of $785 right now. It's got a profit of nearly $500 in it, almost 63% just in the last week, all right, with the calls themselves. Another trade we were discussing last week was McDonald's. So McDonald's had a money counter, but unlike Toyota, it did not have a darknet signal with it. So it's a rarity that you get both. All right, Amazon's doing both right now, Toyota's doing both, but McDonald's just a money counter signal between October 9th and November 19th. We looked at the November 22nd spread, buy to 212, sell to 222 and a halves. We were able to do that for $373 as of last week. So how has this performed? You probably think it did really well, right? Well, it did not. McDonald's actually had quite a few points of a drop on one particular day, and right now this spread is down about $85. Folks, this, I think one of the reasons that people are not as successful in option trading or even in investing in general is that you take a look at investing. All right, how do you become successful in investing, consistently successful? It's a game of averages. All right, that means the more stocks that you're picking using a system that works, the more diversity you have, the less portfolio risk you have, and the same thing goes with options. All right, if I'm using money counter or I'm using Darknet or I'm using a combination of both, I have to know that sometimes I'm not going to be right. And who knows, this McDonald's still has a month, all right? Actually, more than a month, 5 more weeks on this to expiration. So this could turn around and that little $85 loss could become a profit. But you have to realize is that, again, we have the ability to take Darknet trades or money counter trades and do them over the course of an entire year. We get them every day, and so use the law of averages in your favor. The law of time, what I'm talking about is these particular types of trading strategies that happen every single day. Doesn't mean you have to load up all in one day. So spread yourself over time, spread yourself over different securities, assets, options. It's kind of bet often, bet small, bet often. And Jeff actually is quoted with saying that, bet small, bet often, right? So that's the point I want to leave you with. But overall, of the 4 trades that we've used as case studies in the last 2 weeks, 3 of one's not bad at all. And in fact, the market's just really started getting up and going in the last, couple of days. And yet, even last week, we were seeing profits on the positions we were looking at. So great examples as we go through a really interesting time. And remember last week, I mentioned to everybody that October is not as spooky of a month as a lot of people would lead you to believe. For the last 10 years, October has been more of a bullish month, especially the back half of it, than bearish. And don't let a lot of the pundits fool you and tell you that October is the worst month to be in the markets, because they're still living in 1987. Things have changed since then, and so I want to leave you with that. Now let's move forward to one more thing. Last week I spent a little bit of time talking about the money clock, and I talked about the fact that you can day trade options, but you got to do it on really liquid stocks. All right, and ETFs have some of the best liquidity out there. But I'm going to share with you the stock list that I had today. So coming into this morning, I showed you the money clock, and if we need a refresher on it, you come over here. It's a complete trader, and it's in part of the complete trader package, and it looks like a clock. And as you can see here, we can go in and we can type in AMZN, type in Amazon, and I'll just leave everything alone, and I'm going to go ahead and just click on it. And so this is going to bring up, based on 60-minute charts, based on that the display that we're looking at, 7-day look back, and at least a 60% accuracy. You can see what's going on with Amazon. Does a lot of buying in the morning and a lot of selling right before the market closes. In fact, the market's been selling off anywhere from about a half an hour to 45 minutes before 4 o'clock. That's not been happening just in Amazon. It's been happening across the board. Buyers in the morning, sellers in the afternoon. But these are really good patterns you can look at. But I've been testing this and cross-testing this, and I'm going to share with you the best signals of today. So coming into this morning, and I put these all in a spreadsheet so they'd be easy to read. Amazon, 9:35 in the morning to 11:20 was when you clustered everything together. That was the best looking cluster. Netflix, 10:05 in the morning to 1:50 in the afternoon. There's Beyond Meat. That's the only short on there. So I painted it red so you could see it. 19:30 to 12:55. There's a long on Facebook, Apple, Boeing, Tesla, Alibaba, and Nvidia. Now, I want you to, I'm going to go through each of these real quickly, just so we can look at how they did today. And I want you to focus on the fact that every one of these I'm going to be putting up here, with the exception of Beyond Meat, is a bull. All right. So let's go ahead and let's make this a 1-minute chart. 1 minute, 1 day. All right, that's good enough. All right, so this is Amazon. All right, now I'm just going to spell these out for you. 9:35 in the morning. All right, so 9:35 starts right here, and then this goes to 11:20. So come out here to about 11:20, and you can see what it did. All right, started over here around 1746 and ended at 1751. A little bit of drawdown, but also a little bit of run up too. So you can see that was a really good pattern. Netflix was the next one. Let's go ahead and take a look at Netflix. NFLX. I've never done this before with our Optionetics group. It's gone inside of the day. But I've had this question asked to me quite a bit. 10:05. All right, 10:05 is the start, and then 13:50 was the finish. I'm going to put it right there. There's 10. There's 10. 9:57. 9:58, 9:59, 10, 1, 2, 3, 4, 5. So 10:05 started somewhere around 282.51, and you can see where we ended, which was 13:50. 13:50 was right here. So this one actually ended up being, guess what? A break even. All right, so there's a break even. Now let's look at Beyond Meat. I'm only going to do a few of these. BYND. Actually, you know what? I need to do them all for you. Beyond Meat was 9:30 to 12:55. So basically from the open of the market to 12:55, which is right about here, I'd say that was a winner. Pretty much from 9:35 puts you right about here. That's 123. 12:50 puts you right about here, which is 122. A little bit of a move down. Now I want you to think about this. What do you think you can get on an option if the stock moves down up even a point? You might get a 1 point moves less than a 1% move in the stock, but what is it in an option? Well, that depends. Facebook. This was 9:45 in the morning. Facebook started cranking. All right, so here's 9:45. So we'll start it there, and then 11:40, right about there. Nice move. Okay, 186 to 190. That's 4 points on Facebook. Imagine what you can get on the options. Apple. All right, here's Apple. Now, Apple was 945 to 1345. And so let's go back to 945. Let's go to 1345. This one's a loser. You can see here it went from about 237 down to 235. So about 2 points down. All right, Boeing, BA. All right, so BA was a 1325 to 1440. So about from here to about here. All right, so this was a 1325 is down here. So that's 371 to about, so this one lost about 10 cents. All right, even though these moves look big, this is all pennies right here. These are dimes from one point to the other. So a small loser. How'd Tesla do? Tesla's been just rocking it on this particular pattern. And so Tesla was a 1310 to 1455. Looks like about a break even. 1303, 1308, 910. So there's 1310 and there's your end. Yeah, maybe, I mean, up a little bit, we'll call that a break even. Alibaba, BABA. All right, BABA was from 9:45 in the morning. So 9:45 was right about here. And that was just an hour, 9:45 to 10:45. So here we go, 9:44, 9:45, 9:45, it was about 174.08. 10:45, 174.70. So about a 60.75. So almost a 70-cent move. And then the last one, NVDA. NVIDIA. NVIDIA was an afternoon trade, and that was at 1340, 1320. 1320 to 1455. So 1320, we were looking at about 198.30 to 1455, 197.10. Right, so a little bit more than $1. But you guys can see that day trading, and by the way, what I didn't get a chance to show you, and I wish I did, was to compile all the ETFs, because the ETFs, guys, were, let me tell you what the ETFs were. I remember the patterns. SPY, DIA, and QQQ. I'm just going to put one of them up today because they all had the same start time. It was at 9:45, and it all had the same finish time, which was about 2 o'clock. So here's 9:45. This was SPY at 9:45. Okay, here was SPY at 2. That was a move right there. It was very liquid. We're talking about 297.30 to about 299.50 or 60. But 2 points in that. The Dow had the same exact move. The QQQ had an even more powerful move. But I want to show you kind of what I'm working on. And by the way, all of this is possible using the money clock, which is available in our level 3 trader. Now, I'm going to tell you at the end of the, when Jeff's done talking, how you can pick up this level 3 trader from now to the end of the year. So at this point, what I want to do is I want to turn this over to Jeffrey Beamer, as he is going to be talking about how to become a calendar master. So Jeff, light up your mic.
Tom.
Hey there.
All right, I'm here.
All right, I'm going to flip this over to you right now. So
okay.
Let me find you in the stack of folks here. We got quite a big crowd tonight.
Yeah, nice.
Oh, by the way, as I'm flipping this over to you, Jay, are there any questions on anything so far before that I need to answer before we jump to Jeff?
So far, no, we're good.
Awesome. All right, so Jeff, you should have that.
All right. Let's see here. We're getting things going. And 3, 2, 1 should be popping up in just a second. There we go.
There you are. All yours.
Thank you, sir. Appreciate it. Man, that was good stuff, Tom. Tom doing intraday stuff. That's awesome. All right. Good evening, everyone. I'm Jeffrey Beamer. For those of you who I haven't had the pleasure of visiting with or talking to in some time, If you haven't heard from me or know of me, let me just kind of give you an introduction here. Here I am sitting at my trading desk, like I do every day. All right, and I've been around for a while. I've been around the block, done a lot of things. All right, to give you a little rundown, this is mostly about calendars, but I'll just give you a little background so you know who's talking to you here. I've been around for a long time. I've done this for over 33 years. I started at the age of 19 into the trading world. Pretty much knew what I wanted to do right out of high school. I've been the founder, co-founder, or managing partner of 3 different investment firms, 2 onshore, offshore hedge funds, 2 40 Act mutual funds, and I'm very active in the investment community. I've been the former president and executive board member of the Dallas chapter of the Security Traders Association. I'm still a member of that group, and I'm the former co-chair and eventually chairperson of the Dallas chapter of the Market Technicians Association. The Market Technicians Association is the group that certifies all the professional market technicians out there. So it's just like CPAs and CFPs, certified financial planners. You get the chartered market technicians designation through the MTA. I've been featured in the press back when I was running the hedge fund, especially, but whether it was CNBC, Investment News, Dow Jones Newswire, tons of different media outlets. And then I was a regular featured guest on a program in Dallas called The Educated Investor, which is on a CBS radio affiliate. So that's a little bit of my background. There's a lot more to add, but we're here to talk about calendar spreads. Now, I added a term you may not be familiar with, and that is called delta neutral trading. And what's great about this strategy is utilized when things go quiet. Okay. Everybody is really excited about FANG stocks were really at the forefront of people's minds for a long time. So Facebook, Amazon, Netflix, Google, etc. Okay, all the FANG stocks, Tesla, these are the big movers. They get all the headlines, but there is a group of stocks, and they rotate on a regular basis, that just get really quiet. And it frustrates the daylights out of the people that own the stocks. But for us as option traders, we can make a lot of money focusing in on these stocks. All right, so I'll tell you in a moment what calendar spreads are, but let's talk about the market environment that we need to, where we need to trade these. And most of the time, we need to trade these when the market is really quiet. Okay, and so here's a snapshot of the VIX. I took this earlier today. So this was a current snapshot around midday today. The VIX was trading at 1355. I'll put my little laser pointer on it here. So around 1355, and it's heading down. Okay. So anytime we get down below 15 and start heading down towards 10, and you can see back in 2017, we were really low on the VIX. And what this means is market complacency, okay? The fear and greed that people experience trading stocks, well, there is no fear, it's all greed. And people are fat and happy because the market's going up and implied volatility gets really low. And that's a great environment for trading calendar spreads, okay? So we're kind of getting back down there. This is a good time to be looking at these strategies. Plus, these strategies, and I'll reinforce this in a moment, take advantage of one key component of options, and that is every option expires. Okay, there is a time element to options, and guess what? We're headed into the fall. Lots of holidays. Okay, so we have and days that are kind of slow in the market. So we have Thanksgiving. Thanksgiving week is always pretty slow, and the markets close during on Thursday on Thanksgiving, and then Saturday and Sunday, and then Christmas comes up, and the whole week of Christmas, not much goes on. Well, the great thing about calendars is time keeps ticking away and eating at option premium. And guess what? We can make money at that, and we can do very well at it. So here briefly tonight, and we're going to keep this short, okay? We're going to do a brief overview of what delta neutral trading is, and that's the foundation of what this strategy is. It's a foundation of what a calendar spread is. Then we're going to talk about the basics of calendar, what to look for in a calendar spread, how to become an expert at it. And that's really the key thing, because if you become really good at this, this is just a tool in your toolbox. And if you recognize a chart that meets the criteria, then you can pull this out of your toolbox and throw a trade out there. All right. So a brief overview of what delta neutral trading is. This is a strategy that's unique to the securities market. Okay, you can't do it in real estate. You can't do it in art or any other type of investment. No other investment opportunity allows you to make significant returns from an investment that is delta neutral. Because usually when you buy and sell something, you're what's called flat. So if you buy a home and sell it, well, you don't own it anymore. Okay, but in the options market, there's a unique way that we can actually control something for a certain period of time that is delta neutral and make money at it. And I'll show you what that is here in just a moment. All right. So delta neutral trading incorporates strategies used when the markets or an underlying security trade in a sideways or range bound manner. All right. Sideways or range bound. Doesn't sound too exciting if you're a stock trader, because if you own stock, you want it to run up, right? But again, we're talking sideways or range bound. All right. So let's take a look at the current market here in the Spider Index Trust. And if you take a kind of a look from a, well, say from a 20 or 25,000 foot level, meaning you're looking at more time, really with all the you would think by listening to the financial press that we're just, everything is just going to heck in a handbasket, right? But in reality, we've just been trading in a range here since June on the broader market. It's a big range, but nonetheless, it's been in a range. And when I took the snapshot earlier today, all right, this, we haven't even gotten to the top of the range yet, okay? So it's just trading at a big range, all right? But then look at some of these other periods where we traded in a tight channel, okay? This is range bound, but the direction is down. Or maybe previously when the market was going up, okay, it was stuck in a channel, okay, it was range bound, but it was moving higher. All right, this is something all three market scenarios are good for calendars if you follow the criteria that we kind of outline as we move forward. Okay, so let's look at then, and then another period, well, that was obvious back here, this range here earlier in 2019. So that's year to date here on the Spider Index Trust. Lots of range bound, some of the ranges were up, some of the ranges were down, and the latest range is kind of sideways. All right, so what's an ideal type of stock that we look for a calendar spread? Well, it's pretty simple. Let's take a look at Dropbox. Okay, this is last fall, last September, so a year ago September, moving into December. All right, so down here we have September, October of 2018, December, we get into 2019, March, April, May, June. Look at Dropbox here. If you notice our scale on the right hand side, I'll pretty much scale everything in $5 increments. All right, it's just an old habit of mine, trading in that way I can kind of see what's really happening with a stock and how much it moves. And this thing, look at this, it's really hovering around that 2250 level. So just think, if you own this stock, are you excited? Are you making money? All right, well, the only way you're making money is if you master a delta neutral strategy like a calendar spread. Okay, so if we put some technical indicators on here, you can just see now the channel that this thing is trading in, anywhere from about $21 to a high of $26. And the channel is actually much tighter than that. Look at these little bitty moves day after day after day. That is it's ideal for a calendar spread. All right, and I'll show you, for those of you that are like, well, what is a counter spread? I'll show you in a moment, but let's focus here first on stocks that are consolidating, or they're just quiet. Okay, so that's Dropbox. Well, how about Activision? Okay, this was later in the fall. I took this later in the fall of 2018. This thing dropped down to $55 and then just kind of started trading down, and then around $45, $47 found its the median price that's being accepted. Okay, so really around April is when it started to kind of consolidate here, right between 47 and 46. Yeah, it did dip down to around 43, but came right back up to around the 47, 46 level, just meandering around. Okay, great type of stock for a calendar spread here as we throw on the sideways channel, and that's Activision, ATVI. All right, that was through August. And then I have some things that are a little bit more current here. Okay, this was through just a couple days ago on STM Microelectronics. All right, STM. This is a 1-year chart here, but just look how quiet this thing is. All right, just kind of meandering around, not much going on. All right, and these look like big moves, but when you start scaling it down into these $5 increments, you kind of see how quiet this thing really is, and you can almost anticipate what the price is going to do, right? So during this trend, you just throw some trend channels on here, and it comes right down, and then after it goes down, what does it do? It goes up, and then after it goes up, it goes down, and then after it goes down, it goes back up, just meandering around in this channel. And there's some really cool stuff we can do with stocks like this that are just pretty quiet. Okay, they're not the big volatile things that Tom showed a picture of Toyota Motor a few moments ago, and did you notice that thing gapping around? That thing jumps around like a jumping bean. I mean, just popping around all over the place. All right, so let's take a look at JetBlue. Okay, here's an airliner. Okay, JetBlue, this is today, actually, through today. Look how quiet this stock is, just doing its thing, just meandering around, just slowly. Realize each of these shaded boxes is 2 weeks pretty much here is what we're looking at. So 2 weeks, 2 weeks, 2 weeks, 2 weeks as we go on through. Okay, great for trading calendar spreads. So you're getting at the idea here. Last chart is Petrobras, PBR, same kind of thing here, really quiet, this thing hovering around $15. All right, so these stocks, believe it or not, there's tons of them out there. Tons of stocks that are consolidating, that go through periods, quiet periods, that you can take advantage of and make a lot of money. All right, so let's talk about the strategy. We keep mentioning this word calendar spreads. Let's talk about it for just a moment. Okay, so calendar spread based, this is also known as a time spread. So some people call it a time spread, other people call it a calendar spread. It's the same thing. All right, this strategy takes advantage of an underlying security which is trending sideways or in a range bound pattern, which we mentioned earlier. Okay, this does include stocks, ETFs, and or futures. All right, so the basic calendar spread is done at a debit. Okay, means so your risk is limited to your debit. So if you pay $1, your risk is $1 or $100. Okay, if you pay $2, your risk is $2 or $200. Okay, it's done at a debit, which creates an attractive limited risk strategy. All right, it is constructed by the purchase and sale. Okay, meaning a spread, purchase and sale of an equal number of calls or puts. Okay, that have that's on the same underlying security, the same strike price, but different expiration dates. Okay, and I'll show you what that looks like here in just a moment. Okay, so it's either using calls or using puts, same underlying security, same strike price, but different expiration dates. All right, now counter spreads are one of the most flexible and adjustable of the strategies. That's why they're one of my favorites. All right, is because I can get a little creative with them if I choose to. All right, but let's outline the construction here. A trader creates a counter spread by purchasing a longer term option and selling a near or front month option. Okay, so what that means is I could go out. So here we are in the middle of October. I could buy a December option and sell a November option, or I could buy a January of 2021 leap option and sell a December of 2019 option. Okay, as long as I sell something nearer in time and buy something longer in time, that makes a counter spread. Okay, so a trader creates the counter spread, by purchasing a longer term option and selling a near or front month option. Okay, so how does a strategy that involves the purchase of a longer dated option and the sale of a nearer term option make money over time? That's simple. Simply put, it's time decay. All right, time decay. Because options expire over time, they lose their value over time. All right, so here's the principle behind it. You buy a longer term option, okay? So for a certain amount of time, time decay is not very effective. It doesn't impact the price of the option very much until we start getting into the last 30 days, and then the last 15 days, and then the last 2 weeks, and then it expires, okay? So the theory is you buy that longer term option, and then you sell a nearer term option, which has a shorter term to expiration, okay? So it's gonna have less time value, but it's going to begin to expire, it's going to begin to drop earlier than your long option, okay? So this is where the spread, the distance between these two, this is where the spread comes in. We want that spread to widen out, and where the short-term option is really losing its value, yet the longer-term option really hasn't started to lose its value yet. And that's one of the ways, very basic ways that we make money on a calendar spread, okay? So let's look at a trade example using STM Microelectronics. STM is the symbol here, all right? So looking at this trade, say back on August 1st, okay, we did this trade on August 1st, and you can see the stock was just kind of meandering around, all right? So this is back to just 2 months ago, October 1st, and this is how the trade was set up, all right? So let's study this chart for just a moment here. We go out and we bought the September 20th 17.5 call. That's our longer term option. And we sold the August 16th, so expiring August 16th of 2019, we sold the 17.5 call. So same strikes, but different expiration months. And you can see here the difference. The longer call we bought for $1.23. The shorter term call that we sold to open, we sold for 85 cents. That creates the debit. So you can see the debit here of just 38 cents, $38 to get into this trade. That's one thing about counter spread. Sometimes you can get off a really nice trade for just not very much money. That's one of the things that makes them great. But look at the maximum profit potential, all right? $42. Now, before you roll your eyes and say that's not very much, remember that's profit on your debit. That's 100% return on risk. The potential for that in 15 days, not 50 days, but in 15 days. So this software that I'm using here can only see up to this short option, up to that expiration date. So it's only going out 3 weeks, and you can make, if your assessment is correct, you have the potential of doubling your money in this trade effectively. Okay. Now, what does this look like when you graph it out? All right. So here is what the risk graph looks like. Now, if you haven't seen a risk graph before, effectively we have several different lines that represent time. Okay. The red represents today. So the blue line dissects the most recent price that this snapshot was taken, which was where we were filled on August 1st, all right? And you can see that it was just after an earnings announcement. The stock is beginning to drop, and you see how crazy this chart looks right now? Let me go back a couple of slides here. Does that look like this chart? No, it doesn't, because remember, I've scaled this to $5 increments because it gives me a better reflection of what the stock is doing. So if I look at this chart, it just looks like this thing is crazy volatile, moving up and down, but look at my scaling here. It's just in $1 increments, okay? That's why, we're kind of zeroing in on it. So all I'm looking for is the stock to kind of come back down here in 2 weeks and get right back down to 1750, which it should be able to do. And one thing that I always look at is the implied volatility graph. because one thing about calendar spreads is they are pretty sensitive to implied volatility, and that's one of our Greeks. And that's something that we really go over. So if you're kind of looking at this chart going, what am I looking at here? All these squiggly lines, here's your key up here. The red represents options that expire in 7 to 30 days. The blue is 30 to 60, and the green is 60 to 90. Okay, that's all that these lines represent. What I want you to focus on is where the red line dissects this. And let me ask, is it lower or higher than it's been in the past? Well, it's pretty low, okay? And that's exactly what we like for calendar spreads, all right? Now, here's the thing. There's different things that we need to look at to make sure we find a great calendar, and I go into great detail about what those are, okay? So here's the thing. I've showed you many charts. I've showed you several charts of stocks that are just kind of trading sideways. But what about stocks that are trending up or down? Okay, does a counter spread work for a stock that's caught a bid, meaning it's going up, or is selling off, meaning going down? Well, let's take a look at what we can do. Here is a recent example. In fact, August 1st, once again, Fidelity National Financial. Look at this beautiful trend that this stock is in. Just look at it, consolidated here from February to early April, then started moving up again, and then went sideways, and then started going up again. What do you think it's going to do next? Maybe up to sideways a little bit? I think that's a pretty fair assessment. If you're a technician, you might say, yeah, I think it's going to go sideways to up maybe a little bit more. Some of you may say, oh, this thing is overbought and it's way too high and it's going to sell off. How do you know that? All right, so here we're just looking at going with the trend here. Just nothing reasonable. Don't think this thing is going to cure cancer and go to $1,000 a share overnight. No, that's unreasonable. Okay, we're looking for this thing to maybe go from $43 to $45 in the next couple of weeks. Just a little $2 move. Can it do a $2 move? Yeah, it can. Look at that. There's a $2.50 move in just over 2 weeks. Okay, so it can do that. All right, and that's the way I would construct my calendar. So here is an example of that. All right, so here is an example of this as we move forward. Now remember, August 1st is our date here. Fidelity National Financial, FNF is the symbol here. We went out to, so this is, remember, August 1st. We went out all the way out to December 20th and bought this 45 call, okay? We now can control that asset for 141 days, okay, for $1.35. But wait, we're spreading the position, meaning we're selling something against it. And what we're going to do is sell the September. So it's going to expire in September. 45 strike call for 50 cents. All right, that made my debit just 85 cents for this stock to just kind of creep up and move right into the sweet spot, stay in that trend channel that was moving higher, okay, and walk right up into, and look what my opportunity is here, risking 85 to make 88. My calculation is off a little bit here, but that is a double, okay? That is a double, all right? What happens here, the reason why it's showing this is just an anomaly in the pricing. It's showing our maximum risk is higher than our debit, and that's just an anomaly with options. Our maximum risk is the debit that we put into the trade, okay? So this does have the opportunity to double, all right? Okay, so let's look at the risk graph here real quick. All right, let me go back down here and get my thing started. Okay, there we go. All right, so this is what it kind of looks like. Can you see what using our eyes can do? Is we see this stock just kind of moving up. So put the body of our trade just above it to where the stock can just walk right up into it. All right, and if you want to see what happens with this stock, well, you would be able to here. I'll show it to you, but what we're going to do is you can just go look at a chart. Go look at a chart up to from August 1st for the next couple of weeks and just kind of see what happened with this stock, and it'll give you an idea if this made any money or not. All right. Now look at him. We always look at implied volatility, and implied volatility, is it low? Well, compared to where history has been, yes, it's low, so it meets our criteria. And we will explain in great detail. I will explain in great detail what this means and represents, and how this, may pose some risk to your position. Okay, and how I'll do that is if you're interested in becoming a calendar master. All right, so to become a calendar master, and Tom's going to kind of get into some of the details about it, but go ahead and attend our upcoming masterclass that I'm going to be teaching. All right, and I'm going to give you all the nuances behind the strategy. Okay, that's a key thing. What are some of the nuances of the strategy? What are the little things that can give you the edge to make money in this sort of strategy? And guess what? What if there was an easy button? Well, by attending the class, you will receive an easy button. Okay, and that is a button that you click on that will bring up the best candidates. And guess what? All those charts I just showed you and those trades that I showed you, all were found and created using that button. Using that button, okay? And I will go into great detail of what's behind that button as we move forward, okay? So that's what's upcoming. And in the class, we're going to show you how to find consolidating stocks that increase your odds of success, or how to take a list of stocks and find high probability trades with that list. All right, how to filter those trades out into only those with the highest probability of success. And as I mentioned a moment ago, the nuances behind trade success and putting yourself in a place to increase your winners. Okay, finally, adjustments. What happens when things might go wrong? Because with every trading system and strategy, sometimes things don't go as we planned, and there might need to be an adjustment. How do we handle that? What do we do? And that sort of thing. So gang, I've been doing this a long time, but guess what? There's so much more, okay? I've been doing this a long time, and calendars have always been one of my favorite strategies, okay? Because they are adjustable, you can do a lot with them, and oftentimes they're cheap. So believe it or not, Tom, that's what I had. I hope you enjoyed that kind of overview. And Jay, is there anybody have any questions?
Jeff, before you ship it completely to Tom here, there are just a few. First off, this is done on one order ticket, right?
Okay.
This is done on one order ticket, right? This is done
That's
on
correct.
one order ticket, right?
And guess what? Guess what? Yes, it is. And
Yeah.
guess what? Especially the option specialty brokers, which there's, at least half a dozen option specialty brokers out there. This is a strategy that they're all familiar with. Okay, they even have auto fill into your trading, into your execution log. You can drop down calendar spread, and it'll almost create it for you with your broker. So
Nice.
Yes,
They don't have to train their brokers. Nice.
they don't have to train their brokers. No.
It's asking if you're selling October and November as well.
Yeah. Now here's the great thing that I didn't go into detail. I call that a back-to-back. Okay, sell October, buy November. Absolutely, you can do that. Okay, something that expires in a week or 2 weeks that's still here in October, and then buy something in November. We call that pretty much a back-to-back calendar. And that's the opposite of that would be like that sell September, buy December example that I showed you. That's more of a traditional type of calendar where we can roll from, I didn't even go into it, but we can hang on to that December option. We could roll from September, and then when that expires, then sell October. And when that expires, we sell November. Oh my goodness, just think the profits that can be made on that. And I didn't even go into that. But yes, absolutely.
Nice.
Sell October, buy November. Yep.
All right. And then lastly, Dave's asking this, or he's stating this doesn't even cover commissions. Do you want to explain?
Here's the thing. Commissions have absolutely bottomed out. Okay, this is a two-legged trade, so commissions are very small. And if you're using the right type of broker, okay, if you're using the right type of broker, your commission should be not even a factor now. Okay, they are dirt cheap. What most brokers have done is they've eliminated a lot of the costs if you do everything online. Okay, and where they get you is if you need a broker assisted trade. So if you have to call your broker and have them help you help assist you with your trade, then it's usually around $25. So that's the adjustment a lot of these brokers have made. If you do everything online, it's dirt cheap, but then if you need human help, that's where they get you. So yeah, commissions shouldn't even be an issue.
Oh, they're actually. I mean, there's been news that's gone out in the last couple of weeks that a lot of these guys are going to free commissions.
Yeah,
because they're going to lose their active traders to companies like Robinhood. And I know for a fact I've heard Charles Schwab, in talks to reduce everything down to free, and I'm sure everybody else is going to tumble too.
Yep. All if you do it yourself, that's the way it's headed. I mean, most of the option specialty brokers don't, through the assignment and exercise process, and we will cover that topic in our class. They don't even charge anything for assignment and exercise anymore. I mean, geez, that used to be $15, and then before that it was $25. Then it was $50 before that. I mean, it was like crazy.
I've noticed a lot of mine of that I'm not getting charged to come out, to take the trade off at the end of the day. And if it's and this was before this started happening. And even the really small, dollar stuff, if you're taking something off toward the end of the day or towards the end of expiration, there's been a lot of times I haven't gotten charged one penny, which is a little bit shocking at first. But anyway, Jeff, thank you so much for this evening. Guys, so Jeff, you want to summarize real quick that trade the last trade you were sharing with them?
Yeah, summarize it as far as did it? Because
you're going to follow this and other trades in the Calendar Mastery series, right?
We are, yes, we are, and we're going to actually do some. We're actually going to show like current stuff that you could actually take, in theory, like
absolutely.
For real.
And for those of you that to want to join Jeff, so he does this once a year. It's only a once a year program. It's Calendar Mastery, and Calendar Mastery this year actually starts next week. It actually starts next Tuesday at this time, 8 p.m. to 9:30. This is a more than a 5 week. We're gonna do some pretty cool things, seeing as this is the last program that we're offering for the year. So Jeff's got a 5 week mastery. He talked about all the different things that we're doing with this particular program. But if you were to kind of break it down, it's 5 weekly, 90 to 120 minute live online classes. We have 6 months of recording. You get live case studies throughout the series. So he's actually going to be putting trades on and as they mature, taking them off or rotating them out in a back-to-back, as he calls it. There's upgraded tools. And what we're doing is we're taking your tools and upgrading them to include the Calendar Mastery Scan. All right. Also, an upgraded forum so that you can talk to Jeff when he's not live in class with you. You have the ability to talk to him during the in-between weeks as we're moving through from week to week. And then, of course, live technical support. Now, we're going to do some other cool things, too. We know that those of you that are brand new to us and they're interested in this program, you probably don't have our software. And so we're going to comp you some software. In fact, we're not going to just comp you the option trader software. We're going to upgrade you to the complete trader software, which will allow you to get things like the money calendar, darknet, literally everything that we offer. We call it the complete trader. And I've been using that over the past couple weeks to spot opportunities with you and to create these low risk trades. All right. I want to also mention that that also comes with videos. We've got a video collection now that is hundreds on how to use different features of the tools. And these are all roughly about 10 minute videos. This isn't like you're going in to watch a movie. All right. We try to keep it to the point of what it is that we want to teach you in that section of of the software. Now, our triple bonus to our 25 members, which is all we're accepting on this particular run, is we're going to make this a 6-week program instead of a 5-week program. So the 6th week, the final week, will be the week after Thanksgiving, and so this will take you all the way through from starting next week through November. We're going to double the time of recordings so that you have access to these recorded live events to listen to and watch at any time up to a year from now. And I want to take your tools, and we were going to do a 30, and then we said, oh, let's do a 60. But you know what? I'm going to take your tools all the way to the end of the year. So this will take you all the way out an additional month past Jeff's program. That'll take you all the way out to December 31st, 2019. All right. The other thing we do with our new members is we do offer a money back guaranteed. So it's very simple. Sign up, join us. And Jay, can you throw that link up, please, on the chat box? So join us. We have a special link here. This is not something you can go Google and find it. We don't put these out there for just everybody, right? They're only available through this particular webinar, and then, of course, the follow-up that we'll send you with this recording. So sign up, join us next week. And if it's not for you, you just email us before week 2 starts, and we'll give you a full refund. All right. This offer will expire in 1 week, or if we hit 25 people, whichever occurs first. If you want to sign up, then what you're going to want to do is you are going to want to use the link that Jay provided, and that is it says tomgentile.com/19 new calendars. And so let me just double check and make sure that is in the chat box. I don't see it, so I'm going to put it out there for you guys.
I'm typing it in there. Yeah.
There we go. I'm fast, Jay. I got to be. I'm a day trader. So anyway, yeah, check it. Just click on this link right here that Jay and I both put out there to you, and then this will take you to this page. It says Tom's 1% Partner Program, Counter Spreads, Mastery Series with Jeff Beamer. All right. It says 5-week. We're upgrading that to 6. It says down here, 6 months of recorded access. We're going to double that, make that a year. We do also include, it says down here, I think 60 days. We're going to actually run that out all the way to the end of the year. There's your money back guarantee. Read all of that. If you like that and you want to join, click on the orange button that says expires in 1 week. Don't miss this. Click on that, and you'll come to a terms and conditions page. Read that. If you agree, click I agree. That'll take you to the PayPal page. When you get to PayPal, you will see the special price that we have. Regular price on this is $24.90, and so we're cutting it down to $14.95 for, again, the first 25 folks. I opened this up earlier today and actually had 2 of these in here for some reason, so I removed one. But it does show your special price, and then $14.95. If you subscribe to PayPal, if you're a PayPal member, you can check out right here on the yellow PayPal button. If you're not a PayPal user and you just want to pay with a credit or debit card, you can check out using the button below that just says checkout. It's a gray button, and that'll take you through the steps. I'm going to click on it. It'll take you through the steps that you need in order to check out using their guest checkout. Once you do this and you've paid, your payment is completed, you're going to immediately receive a confirmation email from us. And that's going to give you, that's a welcome package, tells you exactly what the program's all about. It's going to give you the links to register for week 1 and talk a little bit more about the counter spread button, the ways to get in touch with us if you need us, et cetera, et cetera. But that's how you do it, guys. And again, Jay, any final questions before we call it a night?
No final questions.
Okay, well, I want to thank you guys for joining us on this 3-week Optionetics webinar series, Trading Essentials. We will be back again with you sometime, probably after the holidays. We'll be doing our January special, which will be the year 2020, and I'm going to have no less than 5 trades that I'm going to be sharing with you, especially right out of the gate on week number 1, and that'll be coming right after the holidays. So I'm going to wish you all an early Happy Halloween, Happy Thanksgiving, Merry Christmas, Happy New Year, Happy Holidays, and everything in between, because I don't know when I'll be talking to everybody on such a large scale again. So thank you all for joining, and we will see you again real soon. And hopefully we'll see you next week, starting with Calendar Mastery. Thanks, everybody. Bye now.